Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's a new month, a new financial year, and of course a new week, but of course a holiday and truncated week. But yes, an important week as the details of the US President Donald Trump's reciprocal tariffs will be out tomorrow, and that is likely to shape how the markets will move, what the contours of the tariffs will be imposed across nations, and how the global trade will also shape up. The sentiment to start off the week is quite negative because we have the GIFT Nifty, which is indicating a gap down start for our own markets. If you look at the global cues, that also stand quite mixed. US futures have slipped overnight, and it looks like a risk-off sentiment at this point of time. US markets mixed overnight. Dow Jones and S&P 500 ended in the green. However, the Nasdaq index closed in the red overnight. Asian markets, meanwhile, has been doing well this morning. Nikkei 225 is up about 0.5%. But what is interesting is happening is in the oil markets after Donald Trump said that he would impose up to 50% sanctions on anyone who buys Russian oil. Now, basically, this came after the ceasefire deal with Ukraine is still on a standstill, and he doesn't see any significant moves by the Russia to close the ceasefire deal anytime soon. Now, as a result of this, oil prices did rise to a 5-week high. So that's a negative for India too. But in a market like this, how you should be placed, we will be getting our market experts like usual. So don't forget to drop in your stock related queries on our live feed and we'll take them up shortly too. But before we move things further, let's quickly take a look at the top headlines this hour. Wall Street rebounded sharply from early losses, which sent the Nasdaq and S&P 500 at the 6-month low intraday ahead of Trump's tariff announcements tomorrow. Dow Jones ended 1% higher and S&P 500 gained 0.5%, while the Nasdaq ended lower. Asian markets opened largely higher following a sharp recovery in the Wall Street, with Nikkei 225 up over 200 points. The GIFT Nifty, however, suggests a weak start for the Indian markets. Gold hits another fresh all-time high amid speculation Trump's April 2nd tariffs could target all trade partners, while crude oil prices climbed 2% to 5-week high on Russia-Iran supply worries. The government is supposed to convert the Vodafone Idea's outstanding spectrum auction dues into equity shares, which is worth about 36,950 crore rupees. The government stake will increase from 22.6% to 49%, but promoters would retain operational control of the firm. Shares are to be issued at 10 rupees apiece. India and United States reach an understanding on the next steps toward a mutually beneficial bilateral trade agreement, and sector-level talks are expected to take place virtually in the coming weeks. Discussions have been held on increasing market access, reducing tariff and non-tariff barriers. Alright, so if we take a recap of the last session, Nifty did slip about 0.3% below that 23,550 mark. But for the week, Nifty was up about 1%. Midcap and small cap indices also ended in the red in the last session. But FY25, if we take a recap, that was quite good for the markets because Nifty rose more than 5% and 27 stocks ended in the positive territory in FY25. Even if we look at the last month, we have broken that 5 months trade declines from October onwards, and we saw a positive close in March. Of course, some of the staggered buyings by FIIs helped the overall breadth. And even if we look at the broader end of the markets, the mid-caps and small-cap indices have outperformed in the month of March. 7 to 9% gains coming in from the Nifty Midcap and small-cap indices. But yes, all eyes will be on the reciprocal tariffs tomorrow, because that will shape how the markets are going to move and how much markets are actually pricing in the reciprocal tariffs as per now. But first two cues that will set the tone of the trade today. First up on your screen is your Nifty put call ratio that has fallen to about 0.92 levels from 1.01 levels in the previous session. There is some cautiousness in the markets which is kicking in at this point of time. Fund flows, if you look at the last session, FIIs have been net sellers. They have sold about stocks which is worth about 4,300 crore rupees in the cash markets. Now, do note that this comes after 6 sessions of buying that the FIIs have once again turned net sellers in the Indian equity market. On the other hand, DIIs, they continue to be the buyers. They have bought stocks which is worth about 7,600 crore rupees in the cash markets. Now, just a couple of minutes before we go to the open, however, as of now, Sensex is down about 500 points in the pre-open rates, and Nifty is also down about 192 points below that 23,350 levels. We're still down at this point of time. Now, before we go, to navigate what your trading strategy should be and to answer your stock related queries, let's quickly get on board with our technical expert of the show. Joining me is Ajit Mishra of Religare Broking. Ajit, good morning. We have a new financial year. Last financial year, 5% gains for Nifty. How do you see the upcoming financial year to pan out for the markets?
Yeah, good morning, Lovisha. So yes, a new start means last year was mixed, wherein the first half was good, but October onwards we saw that market witness significant pressure, profit taking, I would say. This year, see a lot of clues, especially from the global front, which are currently trading the trend. But eventually, obviously, the earnings are the one which market is currently focusing on. As of now, I feel that the volatility is likely to remain high. There's no doubt about that, considering the kind of challenges that we are seeing on the trade war related news and geopolitical and other factors. Obviously, the earning part also is something which market will be keeping a close eye on. Means any improvement on that front that would definitely bodes well for the markets. Very short term, I feel that the start means last week was the week of consolidation for the market after a strong rebound, and we have reclaimed the long term averages, which is a good sign. Means, but are we going to sustain those levels? That is the question as of now, because earlier we used to see that once we used to reclaim the key levels, markets usually make multiple attempts to defend these levels. Last week was a similar attempt. 23,400 on the Nifty is the area where we have the long-term averages placed, the ribbon for 100 and 200 days of exponential moving average. If we manage to hold this level, then obviously we can further extend this recovery towards 23,800, which we tested last week, but we couldn't sustain, and probably towards 24,000 level also. In case if it fades, let's say we break this zone again, then 23,100 will be the area where Nifty is going to find support. So for those who are sitting on positional longs, 23,400 on the closing, this should be a stop loss, because once we break this mark, probably the consolidation is likely to extend further. But amid all this stock-specific opportunities, especially in the banking financial pack, wherein we are seeing consistent outperformance, something that one should keep a close eye on.
Okay. Ajit, you mentioned that consistent outperformance could be watched out on Bank Nifty, but 6% returns in the past months, it's above that 51 for 550. Can we expect 52,000 soon then?
Yes, so in fact, 50,700 would be the mark for banking index to maintain this outperformance, and I'll not be surprised that if we gradually inch towards the record high zone as well, means 52,800, 53,000 plus zone as well. Considering the strong performance from the private banking majors plus the counters from the financial heavyweight pack as well. So until we see any sign of reversal, one should not challenge the view and continue with the overall positive tone.
Okay, all right. Ajit, we will be having auto sales figures trickling in today also, and Nifty Auto Index, however, has underperformed Nifty in the past month. What is next that way we can eye out from the Nifty Auto Index levels?
So I'm seeing stability a bit now. Means if you see that last week also stocks which were underperforming within the auto basket, be it Tata Motors, despite the all going tariff related news, Bajaj Auto, Hero MotoCo, they've all made attempt of recovery. Plus the stocks which were anyways holding well, like Eicher, TVS, they maintained that bias. And we have in the middle stock like Maruti, which is consolidating around its long-term averages. So I feel that this sideways consolidation might continue. Means the downside seems capped for the auto majors, including the ancillary names. So selectively, one can continue to look at the quality names for accumulation on dips. Aisha definitely tops the list when it comes to the outperformers.
Okay, Aisha is a good approach. Ajit, what about, how do you suggest investors to approach the export-oriented themes like IT and pharma, given we have the reciprocal tariffs heat, which is supposed to get announced tomorrow. But IT stocks, that was a major drag in the last session too. What are you expecting?
True. So, Lavisha, the only thing that one can do is to refrain from any long position in the sectors or themes which are underperforming anyways. Means IT is one such pack wherein we have seen the underperformance in this entire recovery. Then we have pharma names also, wherein we are seeing that very select counters which are holding strongly, while rest of the pack, they are witnessing a consolidation tone. So until we have this clarity over this reciprocal tariff issue, one should refrain from any fresh long positions. Those who have made investment, definitely they can stay put. There's no doubt about that. That for just event, one should not change their view. Obviously, we'll wait for the earning announcement and then we'll see what kind of implications that we are seeing on these stocks based this tariff change.
Okay, okay. Ajit, what about OMC stocks? Because past 1 month, all of them have shown quite good recoveries, be it BPCL, HPCL, all of them have shown good recoveries. But now that Trump has, threatened with about 50% tariffs on, anyone who can buy Russian oil, and oil is also up about, 5-week high. How do you expect investors to approach it?
Right. So, see, again, from roughly around $70 to 74, $75 per mark, obviously that might cap the upside for the OMCs, which are seeing a decisive recovery. But at the same time, we have seen, strong underperformance from across the OMC pack. So, I believe that there could be a bit of consolidation, not the complete trend reversal, and that also we need to see whether the crude manages to hold this level or not, or whether we're going to see further recovery in crude oil prices. So as of now, one should not chase any OMC stock. Those who have existing position, BPCL is a better candidate within the OMC basket because we are currently trying to surpass the hurdle around the long-term averages around 282. So let's say if we break this zone, then probably we can extend this recovery to 300 plus levels also. So with stop at 268, one can continue their longs in BPCL even at current levels.
Okay, okay, Ajit. Ajit, anything that you're finding value at this point of time, any sector in specific that you feel that, is expected to do well in the coming financial year?
In terms of recovery, I would say that selectively auto and IT also means I believe that, at one point of time when we were seeing banking or IT were among the top performing sectors. But post all this, tariff-related challenges and other, sector-specific issues, we have seen decent correction, in the IT majors. So probably, I feel that IT, after this corrective tone, maybe the sideways tone might continue in the shorter term. But medium to long term, definitely outlook looks positive. So large cap IT names like Infosys, TCS, HCL Tech is something that one can look to accumulate in case of the correction further strengthening.
Okay, all right. Our first rates coming on your screen. Nifty has opened with a 0.5% cut at this point of time. 23,394. That's where we stand at this point. 23,400 mark. That's where we stand. Sensex down about 500 points, nearly, more than 0.5% cut coming in for the Sensex too. If you look at the mid-cap and small-cap indices, both mid-caps is seeing, 0.4% cut for mid-cap index. Small-caps also with about, 0.1% cut coming in there. India Wix, the volatility index, that has jumped, which is your 6% jump, which is seeing your India Wix, which are hovering about that 13 odd levels. If you look at some of the sectoral indices, Nifty IT index, as we were talking about, showing a sharp cut of about 1.4%, top sectoral underperformer at this hour, at this point of time too. Bank Nifty index, relatively unchanged at this point of time. Nifty Auto index, slim in the green at this point of time, given that we have the auto sales figures which will be, slowly and gradually rolling out too. Nifty Metal index, 0.8% cut coming in for Metal index too. Nifty Pharma index, Nifty Realty index, all of them, at this point of time very flat. So yes, market is watching out for the reciprocal tariffs, and there is a bit of a cautiousness which is kicking in the markets too. If you look at some of the top gainers on the Nifty 50, that includes the likes of Trent with about 2% gains, ONGC, Hero Motocorp with about 1% gains, Zomato doing well, 0.5% gains coming in there too. On the other hand, if you look at the converse picture of the Nifty 50, the top losers pack, that includes the likes of Shriram Finance with about 1.5% cut. Some of the tech names are not doing well as expected, given we have the tariff uncertainty playing out. Tech Mahindra with about 1% cut, TCS with about 0.5% cut, Bajaj Finance not doing well, and Apollo Hospital also experiencing of about 0.7% cut. But one stock in focus that we'll be talking about, that is your HAL, which is your Hindustan Aeronautics, doing quite well, 5% uptick coming in for the stock. This comes after the Cabinet Committee on Security has approved the biggest ever defense deal to procure 156 light combat helicopters, which is your LCH. Now the deal is valued at 62,700 crore rupees, and it marks the largest order ever received by HAL. If you look at the brokerage note which has come out today, UBS has maintained its buy call on the counter and has upgraded the target price of HAL to 5,440 rupees. And they expect the new financial year to be an inflection year for defense ordering. Ajit, past 1 month also HAL has given quite tremendous returns. Do you believe that there is more upside left in the stock?
So HAL definitely, Lovisha, we have seen exceptional run. In fact, in the recent recovery, it's among the top performing name within the defense basket. And the kind of correction that we were seeing from the top means from 5,600 to 3,000 levels. We have ended that corrective trend as well. So now I believe that after this strong recovery, there could be some consolidation. So near future, 4,200, 4,100 is the zone basically where we have multiple supports now, and gradually we can inch toward 4,720 as a immediate target zone. So from very short term point of view, one can look to accumulate on dips with 4,720 as an immediate target, and positionally also one can stay put with 5,200, 5,300. Maybe means gradually we are inching towards the record highs.
Okay, all right. Let's take another stock in focus, that is your Varun Beverages, about 1% gains at this point of time. Now this comes after the company has entered into 100% share purchase agreements with Ghana Bottling Company and Tanzania Bottling Company. Ajit, if you look at Varun Beverages, the stock has been quite the street favorite also. So multiple brokerages are eyeing about 800 levels. Do you believe 2-3 months would be good for the stock to reach to these levels?
So Varun Beverages, Lovisha, we all know it's a very consistent performer. Means only couple of occasions. Means in 2020 during the COVID time we saw a sharp dip. Otherwise, it's a very consistent performer. If you'll see in the last 15-20 years of price action. Of late, in the last 5-6 months, we've seen a consolidation followed by a dip. And again, we are seeing a very strong recovery, means almost a V-shaped recovery after this decline. So very short term, probably we might see stock struggling around the long-term averages, which is placed around 560 area. But from the medium to long term, definitely there's a possibility once we break that zone, we can gradually inch towards the record high zone, which is around 640, 660 area. So one should not look for very short term view. If your view, let's say for 2-3 months, definitely you can look to accumulate with 510 as a closing stop loss and 620, 640 as the position target.
Okay, all right. Now let's take some viewer queries because they have been waiting in anticipation right now. The first query coming in from Naveen. He's holding Indian Overseas Bank shares, about 3,000 of those shares at 43 rupees. He's asking whether he should hold, exit or average. Ajit, the stock has hit a 52-week low once again today, and a couple of past 3 days also the stock has not been doing well. What should he do at this point of time then?
Right. So, Lovisha, we were seeing that last week, in fact, a week before also, that some of the PSUs name in the banking space, they did well alongside with the private banking majors. But select names like IOB is something which is still struggling. We are very close to the major support area, which is around 36, 36.50. So since he has been holding for quite some time now, so that is the only stop loss that one can maintain, means at 36, and use any recovery towards 42, 43 area to exit his position and switch to the private banking measures like HDFC, Kotak or ICICI.
Okay, all right. Let's move on to another viewer query. That is your Rajesh is asking on voltamp, voltamp transformers. Ajit, how does the stock look like? Because it's attempting to make a recovery, but however, today the stock is up about 1%. But what do you expect the next near term to hold?
So after this phenomenal surge, means in 2021 the stock was quoting at around 1400 mark to a record high of 14,000 plus. Uh, is a phenomenal move, and after uh, this rally, we've seen decent correction, I would say, because the stock almost reduced to half from its record highs and retested its long-term averages on the weekly charts around 6,000 area, consolidated a bit. So now probably we are set for the recovery. Means in recovery, 80 to 50, that's the first hurdle, and then gradually towards 9,700 mark. So as of now, if the view is, let's say, for 3 to 6 months, you can definitely stay put with 60 to 50 as a closing stop loss, for 9,600, 9,700 as a positional target.
Okay, all right. Let's move on to another viewer query. That is Naveen asking the view on Shriram Finance. Well, Ajit, today it is one of the top loser on the Nifty 50 charts. But Shriram Finance has been doing well. If you look at the 1 month chart, has been doing well. Past 6 months also, it has fairly, it has relatively not underperformed the market on a larger term. But what do you see the next near term to hold for the stock?
Right. So, in fact, we have just retested the record highs. So, definitely it's among the top performing name within the NBFC basket. And this dip, which we are currently seeing, is a normal profit taking, which we usually see around the record highs area. Currently, we are testing the short term averages. So, probably the bias would remain sideways in the near future, with 630 35 being the immediate support area. So that should be a stop loss if you have any existing position. In case of recovery, 665, 670 will be the area where we might face resistance. So this could be the probable range in the near future. So if the view is very short term, you can utilize this recovery to reduce your position. And for fresh entry, wait for a breakout above 685.
Okay, 685 that we can wait for Shriram Finance. Let's move on to another viewer query. Mukund Yadav is asking the view on Titagarh Rail. Ajit, how does the stock look like? Because 30 to 40% correction the stock has already seen. Past 1 month has been relatively good for the stock. But can you expect this rally to sustain for Titagarh Rail?
So yes, last weeks we have seen recovery in railway related counters also, but the quantum is still less in comparison to what we are seeing in the other themes. So stay stock specific. 825, 830 is the zone basically where we have multiple resistances in Titagarh, and downside in around 750 is the immediate support. So risk reward for fresh position is not advisable. If you have any existing position, 775 should be your stop loss. And let's say if we break 825, then one can wait for 920, 930 area. Around that area, you should definitely book profits.
Okay, all right. Let's move on to another viewer query then. The next, Mukund Yadav is asking the views on Bikaji Foods. How does the stock look like on the charts, Ajit? Past 1 month, 4% returns. If you look at 6 months, it's still about 27% down. What is the near-term hold for Bikaji Foods?
Right. So near term, again, we are resisting the long-term averages, which is placed around 700 mark. So once we break this zone, probably this recovery can further strengthen, and 780 to 800 is something that the stock might attempt. So as of now, you can stay put with 650 as a stop loss. But those who are looking for fresh trade, wait for a close above 710. Then we'll see a strong momentum in the stock in the near future, with 700 being the stop area.
Okay, all right. 700 area that we can eye out for Bikaji Foods. Next query coming in from Satya is asking the views on edgy infra. From 1500 odd levels, Ajit, it is down at 1050. Can we expect it to reclaim those levels soon going ahead?
Probably we can see consolidation now after this corrective tone because the long-term averages plays around 900 mark, and that's the zone basically where last time the stock witnessed a breakout from the consolidation pattern as well. So the downside seems capped, but upside also we have multiple resistance to cross to reclaim the momentum. Means 1125, 1130 is the area where we have first hurdle, and then probably around 1300 something the stock might test. So as of now, if the view is very short term, you may exit because likely to consolidate in this range. And if let's say view is 3 to 6 months, you can maintain with 900 as a closing stop loss with 1300 as a positional target.
Okay, 1300 as a positional target that we can eye out for. But let's take one stock in focus, that is your Vedanta. The stock has not been reacting well, 0.8% cut coming in after the mining major has extended the deadline to complete its planned demerger from March 31st to September 30. The company has said that it cites pending approvals from NCLT and other government authorities too. Ajit, metals have been outperforming, but where do you stand on Vedanta as an individual counter?
So Vedanta is among the one of the top performing name, within the metal counters because we are very close to the record highs. The stock is comfortably trading above all the key averages. So interpreted profit taking after this consolidation is okay. Very short term, 452 that should be your stop loss area. For fresh buying, let's say once we break 475, then probably we can test the record high zone as well. Means 510 maybe higher. So one should wait for fresh position, but existing position also you can wait with 452 as a stop loss.
Okay, all right. Let's move on to another viewer query. Shweta Naidu is asking, what are the good levels to enter at Shakti Pumps? Shakti Pumps still, after its top in January, Ajit, the stock is still down about 30% from there on. Do you think that this is the right time to enter the stock at this point of time?
So Shakti Pumps consolidation is more likely. So I feel that one should, avoid any aggressive positioning. Means if let's say your view is for a month or two, definitely you can start accumulating, but be gradual in your approach because consolidation is more likely in the near future.
Okay, consolidation is likely in the near future for Shakti Pumps. Let's move on to another viewer query. That is Amendra Kamath is asking the view on Ashok Leyland. Ashok Leyland, the stock is, quite kind of, with a 0.5% gains coming in today. 1 month charts also, it's like barely performed anything. It was very range bound movement, 1.7% down. Where do you expect the near term to go for Ashok Leyland, Ajit?
So comparatively, Ashok Leyland has done well in the auto basket. Means multiple attempts of recovery, but 220 is what the stock is facing stiff resistance as of now, with strong support at 195. So risk to reward is 1 is to 1.5. So if you're okay with that, definitely you can stay put. If somebody is looking for fresh momentum kind of opportunity, then one should wait for a breakout about 220. Then we'll have a clear cut trend resumption in the stock, which can push the stocks again towards the record highs, maybe means 250 to 60 positionally.
Okay, all right. Let's take one stock in focus. That is your Vodafone idea, because the stock is, soaring in the trade. 10% gains coming in after it confirmed that the government will convert the outstanding dues into equity, and the company will be issuing shares, which is worth about 36,950 crore rupees to the government at 10 rupees per share. Ajit, where do you stand on the stock? Because today it is at 7.5 levels. Do you expect 10 or even 11 to reach soon in the near term?
So we could defend the previous swing low around November. The stock made a low around 6.6, and this time around we were close to around 6.7, and again we are seeing recovery. So once let's say we break 8 level, then probably yes, 8.5 is something the stock might test, and then eventually 10 to 11. But as of now, one should not get carried away because we all know the kind of challenges that the company has been facing. On multiple occasions. It's just one part that related to the spectrum dues, which got resolved. Then we have other challenges related to AGR dues and other spectrum dues. So this is something that one should keep in mind if you are looking for very short term perspective. Also, I believe that Bharti in any case is a better bet.
Okay, Bharti is a better bet than we. But next query coming in from Debu K is asking the views on Canfin Homes. Where do you see the stock to go, Ajit? Because from February lows, the stock has, moved up to about 15%.
So it's a volatile stock, means from 960 to 560 and then again to around 700 mark. Good part is that we have reclaimed the short-term averages. 700, that's the immediate resistance. And once we break, then probably around 735. So as of now, one can continue to participate in this recovery with 645 as a stop loss, with 740 as a positional target.
Okay, all right. Just one last question before we let you go, Ajit. What are your top picks at this hour? We're seeing a bit of a volatility, a bit of tariff uncertainty, but anything that you like from this equity landscape?
Yeah, so Lavisha, the only thing which one can do in current market scenario wherein we have challenges led to global volatility and other factors, stick with the top performing names. One such stock is Indigo. The stock has recently made a new record highs. We are seeing consolidation around that area. So it's offering buying opportunity to those who missed the chance earlier. With stop at 49.50, one can accumulate Indigo at current levels with 5,300, 5,400 as a positional target. At the same time, we are seeing SBI cards, wherein after this strong range bound move in this 820 to 870 area, is gradually inching higher. So here also we are eyeing 930, 935 as a target zone. So with stop at 850, one can accumulate SBI card also at current levels.
Okay, all right. With that, we have to let you go, Ajit. But thank you so much for your time, as always, and for answering our viewer queries.
Thank you.
All right, let's take a quick check of the markets at this point of time. Sensex, it has recovered from its day's low, but still down about 150 points. Nifty is also below that 23,550 mark. 23,500, that is where we stand at this point of time, but still very much off, sharply off the day's low, but still in the red at this point of time. India VIX is also, from 6% to it has cooled off to 5% at this point of time. Nifty IT index with about 1.1% cut. Nifty auto index with about, 1% gains. Pharma index doing well. Nifty Realty index doing well. Nifty IT index, however, as I mentioned, 1% cut coming in. Nifty metal index with about 0.1% gain. So slowly and steadily, we are gradually coming off from the day's lows. If you look at the broader end of the markets, that is also leading the market recovery at this point of time. Mid caps with about 0.1% gains, small caps with about 0.2% gains coming in. So yes, both the broader end of the markets are outperforming the headline indices. But without much further ado, let's move on to our next guest for the show. We have Sushant Bhansali, CEO of Ambit Asset Management. Sushant, good morning. How do you view the current markets now that we have seen recovery in the past month?
No, I think great recovery in the month of March after been looting in last few months, especially January and February. Some sort of consolidation had to happen, and March provided that opportunity in markets. And globally, markets are quite volatile, primarily because of geopolitics, tariffs, etc. And India remains in the same category. But we made lots of money in the markets in the last few years, and it already needed some sort of consolidation. And that's what FACE is going through in the current moment. And we expect that this phase is not yet over. We believe that it will continue for some more time, led by one or other reason. And hopefully, towards the second half of this year, we will see markets coming back in a positive momentum.
Okay. Sushant, we will be having reciprocal tariffs will be more clear tomorrow. But how much do you believe has the markets priced in the narrative?
I think whatever news is there is always priced in. You cannot second guess markets. So many news and now even software is coming together to play in the markets, and that's why no news which is available is not priced in. From our perspective, we believe that you take a view of things over long periods of time, and tariffs will come definitely in certain pockets, and there will be more deal making which will happen. And these deals will keep on continuing, I think, between different countries, including USA, with everyone else in the world. It's not just tariffs, I think, which will matter. It also what's the final deal construct which will matter. And in the next few months, I think we'll see many of these deal constructs coming into play. Hopefully, India will have FTAs with many more countries in the current fiscal year, which starts today, and we will have probably a better export play in the coming few years.
Okay, okay. Sushant, we have seen some staggered buying by FIs in March, but how do you expect the flows to pan out as we start with the new financial year? Now that you also said that, in the next few months, we could see some more clarity and the market could adjust to the new world order that is set by the Trump too.
So the FI buying in March, we don't know whether the reasonableness was more because of rebalancing of some indices or because of conditions becoming relatively reasonable for global investors. We'll see in the next few days and weeks whether it's sustainable or not. If it sustains, then definitely it will continue for long periods of time. But if it does not in the next 1 or 2 weeks, then it was more index rebalancing which took place in the last 2 weeks of March.
Okay. Sushant, valuations was a key concern point for the FIs, but given that we had a muted quarterly earnings performance from the India Inc. too, do you believe Q4 results will hold some promise for the FIs to make a comeback? And what do you expect, and whether you expect the worst of the earnings downgrades to be behind us?
So Q4 results, we expect a reasonable quarter from corporates in this quarter. Q3 results were not that bad as people were fearing. I think it was in line with market expectations. And if Q4 results are also in line with market expectations, then definitely we will see lots of investments happening, and not just from global, but even local investors, I think, which have sort of come down a bit in the last couple of months to come back. Right? Lots of money is waiting on the sidelines, on the domestic side at least. Globally, people will, I would say, wait more clarity on the tariff on the deals which different countries will cut. But we expect a reasonable quarter, I would say, at this point of time. No major cause of concerns for the time being in terms of the data points which have come so far. Be it GST collections, be it the agriculture data, be it power consumption data, or even if you look at auto sales numbers which have just started coming in, so far the numbers have been reasonable as such.
Okay, okay. Sushant, we will be starting off with the IT earnings season also. Key like TCS, Infosys, these all will be trickling in there with their first numbers. But since after this Trump's tariff uncertainty, there's a lot of cautiousness which is emerging on the export-oriented themes. How do you expect this Q4 seasons to pan out for the IT sector as a whole, and how do you suggest investors to approach it?
Nothing meaningful different from Q3 per se. Within Q4, I think the uncertainty is yet to be out. People will still take some time to make the commitments and do deals, especially in the US markets. They all are eagerly watching how things play out, and then accordingly do the deals with the large betting companies. From a domestic perspective, I think the GCC is picking up really, I would say, well. In terms of more and more outsourcing happening directly by companies rather than outsourcing to ITS companies. But many of these GCCs also have lots of work with the ITS companies. So we don't expect too much of variation between Q4 and Q3. Hopefully Q1 and Q2 will see more deal wins, and thereby second half of this year is where we believe that IT companies will deliver better results than where we are today.
Okay, second half you believe that IT is going to fare better. But Sushant, any sector that you are bullish on as we begin with the Q4 results season?
I would say travel and summers, I think, have come ahead. So those are two related sectors. I think any travel related sector should do well. I think the general mood is to do more and more of travel, and we saw how the will play out. Similarly, I think the summer season is holiday season, and travel stocks should do well, travel related stocks, as well as I would say, given the early arrival of summers, anything related to that on the electric appliances side should do really well. These are two sectors. And also, I would say agriculture, the harvest has been a bit delayed, but it has been a good harvest. So thereby the rural-led consumer discretionary items also should do well.
Okay, consumer discretionary that you mentioned. Sushant, what about the consumer staple space? How are you placed on that space at this point of time? Because we did have the budget tax cuts, and we were expecting a good outperformance from them. And of course, the urban recovery had been lagging for quite some time. Do you expect Q4 to hold better for the consumer staple space?
No meaningful difference between Q4 and Q3. I think the staples are not something which are stuck. So that shall continue the way it gradually pick up. Rural was a big disturbing factor for staples companies for almost 2 years, and that has made a good comeback in both. I think slightly towards the end of Q2 as well as the full part of Q3. So that shall continue. So certainly, I think on a year-on-year basis, Q1 and Q4 of FY25 should do much better than last year's. So on a year-on-year basis, the numbers will be better, and thereby I think the expectations of market on these two sectors will be quite.
Okay. Sushant, now that we talked about consumer discretionary staples and of course IT also we spoke about, but any other sector that you believe that should have some apprehension from the investor's point of view, a little bit cautiousness should be taken as an approach?
I think capital goods is one sector where some apprehension will be there in terms of especially a lot of momentum was built on export side of capital goods. Given how the tariff structure will fold out, there will be some cautiousness on that side. Pharma and chemicals again there will be I think lots of apprehensions regarding the tariffs, but I believe that there should not be any major downside on these two sectors in terms of exports, because India continues to be, I would say, among the cheapest quality export house, and India will need to maintain its market share. We want be in both sides, both sectors, and the tariff should not be anything negative in long term in that sector. But markets will, I would say, remain cautious as to how this is the quarter where the tariff certainty will come much more than how it has in the last 2 weeks.
Okay, all right. With that, we have to let you go, Sushant. But thank you so much for your time, and hope that we connect with you soon. All right, let's take a quick check of the markets. We are still in the red. However, a good recovery coming in from the day's low. Sensex is down about flat in the red at this point of time. Nifty also above that 23,500 mark. Slowly we're seeing a good recovery in the markets at this point of time. Definitely your Nifty Auto Index is doing well with about 1% gains or so. Nifty Metal Index doing well. Nifty Pharma Index also doing well. So all of these, are contributing to the overall breadth improvement of the markets too. Mid caps and small caps. Small caps especially outperforming from the broader end of the markets, 0.5% gains coming in there. So yes, we will see whether or not we can see a sea of green in the later half of the session. But with that, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 for Closing Bell. We will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.